The Unspoken Battle, Mastering Forex Psychology. Your $100,000 mistake. Stop scrolling right now. If you have ever blown an account, taken a perfect setup only to exit early, or found yourself staring at your screen at 3 a.m. fueled by caffeine and pure rage, then this is the most important video you will ever watch. Forget the trend lines, forget the indicators. That is the easy part. The reason 95% of traders fail isn't because they don't know market structure. It's because their brain is a battlefield. Today, we are going to expose the emotional terrorists living in your mind: fear, greed, and revenge. We are not just going to talk about them. We are going to give you the psychological blueprint to lock them in a mental cage and throw away the key. By the end of the next 20 minutes, you won't just have a strategy. You'll have the mindset of a professional hedge fund manager. Stick with me because your mental game is about to go pro. Part 1. The Fear Factor. Fear of loss and FOMO. Let's start with the big one: fear. Fear in trading manifests in two evil forms. The first is the fear of loss, FOL. This is why you move your stop loss. This is why you watch a trade hit -2R, panic, close it manually, only for the price to reverse exactly where your original SL was. It's the moment your analysis screams buy, but your stomach whispers, "But what if I'm wrong?" We've all been there. It's a primal human response. Losing money literally lights up the same pain receptors in your brain as physical injury. Your brain thinks you're being chased by a bear, not trading the Euro USD. The second, and arguably more dangerous form, is fear of missing out, FOMO. You see a massive candle move 100 pips without you. Your rational mind knows it's too late, the risk to reward is terrible, but the emotional voice yells, get in now before it's gone. You're going to miss the retirement trade." This is how you enter at the absolute top of a move, right before the market reverses and eats your account. You didn't trade the market, you traded your impulse. The cure for fear? The mechanical mindset. So, how do we fix this? By becoming the mechanical trader. Your rule is simple. You do not manage the trade, you manage the plan. Once you execute the trade, SL set, TP set, you walk away. Your job is done. I want you to imagine your trade plan is a strict, no-nonsense robot. You tell the robot what to do. If the robot tries to override you because you feel a hunch, the robot should immediately lock you out of the trading platform for 24 hours. Slight pause for chuckle. That's the discipline we need, because honestly, your hunch is probably just anxiety wearing a fancy tie. If the trade hits your stop loss, that is the cost of doing business. It is a win for discipline, not a loss for your wallet. You followed the plan. Embrace the small losses to protect yourself from the catastrophic ones. This is non-negotiable. Part 2. The Greed Monster. The just one more trade. Now let's pivot to the flip side of the emotional coin: greed. Greed doesn't usually hit you when you're losing. It hits you when you're on a winning streak. You just nailed 3 3R trades in a row. You feel invincible. You're a genius. You think, my small 1% risk rule is for amateurs. I'm taking 5% on the next one. I'm seeing patterns the market hasn't even drawn yet. I'm going to make the month's target today. This feeling, that surge of dopamine, that is the greed monster. And he is extremely charming. He convinces you that luck is skill and that the laws of probability no longer apply to you. This is how accounts are blown in a single over-leveraged session. The trader who was disciplined on his losers gets completely reckless on his winners. Remember this: greed is the psychological reason why a trader gives back a month's worth of profits in 30 minutes. The cure for greed: the book it rule. To defeat the greed monster, we need a book it rule. This means setting 2 clear boundaries: 1, a daily maximum profit target, and 2, a clear trading exit routine. Let's say your target is $500 for the day. The moment you hit $500.01, you close your platform. You don't just check for another setup. You don't trail a target hoping for another 50 pips. You are done. You walk away. Go outside, clean your desk, do anything but trade. The most successful traders are boring. They don't hit grand slams. They consistently hit singles. They are proud of preserving capital, not blowing up the casino. The secret to long-term compounding is simple. Know when to stop. Hey, if this is helping you look at your trading in a completely new way, do me a favor, hit the like button right now. Every like tells me to dive deeper into these high-level psychology topics. And if you have a friend who is struggling with overtrading, please share this video with them. You might just save their account.
Part 3. The Revenge Trader, the Account Killer. Okay, now for the emotional apocalypse, revenge trading. This is the darkest, most destructive mental state in trading. It usually happens after a string of 2 or 3 unexpected losses. You're not just losing money, you feel personally attacked by the market. Your logical mind is gone. All that's left is a burning desire to get it back. Your inner monologue becomes dark. How dare the market take my money? I'll show it. I'm doubling my lot size. I'm going for a ridiculous 1 to 10 risk to reward ratio. I need to erase this drawdown now. This is the point where a minor 2% drawdown turns into a 50% account killer in under an hour. If you've ever felt the urge to punch your screen, congratulations, you've met the revenge trader. Another brief laugh. He's the financial equivalent of fighting your reflection in a dark alley. Spoiler alert, you always lose the fight. The cure for revenge is the 30-minute time out. Calm and supportive. The solution here is all about de-escalation. If you have 2 consecutive losses or 1 large unexpected loss that hits you hard, you must deploy the 30-minute timeout. Immediately close your charts. Set a timer for 30 minutes. Do something that physically removes you from the trading environment. Go for a brisk walk. Do 50 push-ups. Do the dishes. The goal is to chemically change your state. You need the adrenaline to subside and the logical part of your brain to boot back up. When the timer goes off, you are only allowed to reopen the charts to do a post-trade analysis. Was the loss valid? Yes. Was it within your plan? Yes. Great. Then you're done for the day. Never trade on the day you feel the need to seek revenge. The market doesn't care about your feelings, and you can't outsmart a computer with anger. The quoi? The pro trader mindset. The reality check. Listen, the top traders, the guys making consistent 7 figures, aren't superhumans. They're just better at managing their internal monologue than you are. They understand that trading is a game of probabilities, not certainties. They view every single trade, win or loss, as one of 100 iterations. When they lose a trade, it's not, I am a failure, it's, my edge just played out one of its losing probabilities. Next, they are unemotionally executing a tested system, knowing the positive outcome will arrive over a large sample size. I challenge you, for the next 30 trades, promise yourself you will follow your plan perfectly. Don't worry about the money, just worry about execution. If you can conquer your emotions for 30 trades, you will see a transformation you never thought possible. The akuka, the 20-minute takeaway, and the final challenge. So, to recap the 20-minute lesson. 1. Defeat fear by becoming the mechanical trader. 2. Destroy greed by implementing your book it profit rule. 3. Eliminate revenge by taking a mandatory 30-minute timeout after a bad trade. The market gives the perfect setup to anyone, but only the emotionally disciplined take the money. If you are serious about changing your trading life, if you're serious about becoming consistently profitable, then you need to commit to this psychology. hit the subscribe button right now and join the community of traders who prioritize the mind over the market. Let me know in the comments, which of these three emotions, fear, greed, or revenge, is your biggest battle? I read every single one. Your technique might make you money, but your psychology will make you wealthy. I'll see you in the next video.